Hello, stock friends. Checking in on the market. We've got the FOMC tomorrow, 2 p.m. Eastern, anticipating some volatility, looking for the dollar and for gold to give us some clarity and direction. I'm definitely watching the bull miners if gold can break 1214, as that will be the start, or I should say the continuation of the weekly bounce that has been stalling out and trading sideways for quite some time. So as far as SPY is concerned, we're still in consolidation mode, anything above 287.73. And again, these levels are adjusted for the dividend distribution last week. Anything above 287.73 is a daily high or low. The middle Bollinger Band is still support. And we pretty much have a double bottom down at the low of the past 2 days, 290.37, 290.48. No red flags for the bulls unless we lose the daily uptrend. Declining bear volume, pretty low volume day overall. Looks like the market was just waiting for tomorrow in the FOMC with the lack of action we saw today. Weekly time frame still all bull, lose exponential supports, and we will look for a bit of some healthy weekly consolidation. IWM still the weakest of the markets, lower highs and lower lows continuing. Anything under 171.82 is just a lower high, and we are looking at support of 168.76. In order for the bulls to change the trend, we're likely going to have to set a lower high compared to 171.82, form a higher low, and then break resistance. The weekly chart is not a red flag at this point. It's healthy consolidation, could potentially be a weekly bull flag, but the bulls are going to have to change the daily trend in order for the weekly bull flag to increase the chances that we get continuation. QQQ, nice little follow through from yesterday. All about 185.15 resistance. As long as the bulls hold 181.30, they remain in absolute full control with higher lows at their backs. So bulls extremely comfortable. Bull MAC decross is potentially closing in, but it's still all about 185.15 resistance. And again, pretty solid recovery by the tech sector today. Weekly time frame still all bull, potential inside bar this week, and tightening ranges. XLF pulling back on declining bear volume for the third day in a row. We are looking for pretty much, we're going to see a bearish reaction to the FOMC, and we'll look for the bulls to try and hold 27.85 and 27.94. And if it's a bullish reaction, we're going to be looking back up at $29 resistance. So if we get a bullish reaction and a higher low, we'll look either for a lower high or a test of 29. So looking for the potential of a tightening range, and that is going to be very key because it's been clearly bearish momentum the last 3 days. Bulls don't want to give this move back, and they want to keep this uptrend on both the daily and the weekly time frame. So pretty much have to see a bullish reaction for the financial sector to remain comfortable on the daily time frame. VIX on the daily chart, still weak overall. Resistance is 1292 and 1375. Support is 1180 and 1110. Weekly time frame, Bollinger Bands are potentially starting to expand again, so they might not stay tight for long. But the bulls have to break these lower highs, which they have been unable to do so. So until that occurs, the bears have complete control. So all about 1292 tomorrow. If that breaks, that's just step number one of the bulls shifting some of this daily momentum. So pretty much that's where we stand. I'm going to be pretty conservative tomorrow. The gains in Canadian MJ have been great over the past week, 2 weeks, and I'm not going to give any of that back trying to play this volatility. If I see clear setups that I like, I will get in on the action. But otherwise, again, my attention is going to be on these bull miners, and we're going to watch to see how gold breaks and have to be cautious of fake outs, of course. The first 10 minutes of the FOMC reaction could definitely see a 180 turnaround. We've seen that plenty of times in the past. So still no red flags for the market bulls. Daily higher lows remain intact. We'll see you soon.